You and I have caught up a couple of times this year in Abu Dhabi. You did a big deal with ADNOC at the start of the year. I want to understand what the progress is on the refining deal that you've done and what comes next on the exploration, because there's a few blocks up for exploration. What's next for you?
So next, the first drilling that we're going to do in the region will be in Oman in February. That is new. It's the first deep offshore and the first offshore drilling in Oman. So it's quite important in the block 52. Mm-hmm. That is most likely gas condensate. That is a very important achievement. We are going to drill after 7 months. After the acquisition, 7 months, we are ready to drill. Then we are going to drill in Bahrain and then in Abu Dhabi. So we have a program of about 10 wells in the next couple of years. So it's a very intense exploration activities. And in 1 year, we became the first exploration company in the Gulf. So we set up all our organization. We have more than 170 people in place, and Abu Dhabi will be the main logistic hub for the region. So we're going to run all the exploration, all the drilling activity from Abu Dhabi.
What sort of size in terms of numbers can we expect from these new drills in Oman and Bahrain on the gas side?
So that is, we can't talk about billions of oil equivalent, barrels of oil equivalent. And
2 billion, 3 billion?
That we have to drill first.
Okay.
So we have to drill first, but I think that all the prospects have a very high probability of success. So we are quite optimistic.
Do you want to bid aggressively in the exploration round that's going to go on here in the next couple of months?
So for sure we're going to participate. We want to increase our position because we have to create a critical mass. Mm-hmm. And this region will be our future. So for sure we are going to follow all the different activities and opportunities.
So a deeper relation here in Abu Dhabi. Can I talk to you about Egypt? I've got various people saying to me that you're interested in Dana Gas's assets in Egypt. Are you?
No.
Are you bidding for any assets of Dana Gas?
No, we are not. We discovered so many resources, so many reserves, and now our focus is to develop these resources. And when you discover, your cost is lower than when you buy. So clearly we are focusing on our organic growth, and we are going to continue.
The pressure around the world seems to be on the margins. That seems to be one of the themes that we're exploring. How much pressure is there on your margins, or what can you do to bat against that?
As I told you, our answer to margin is exploration, because when you explore,
yes,
your structural costs are very low, and we have the lowest cost in exploration, because the cost of each barrel is about $1 against an average of the industry of $6. So exploration is the first answer to the pressure on the margin, and the organic growth is the first answer, and also to be all along the chain from exploration to the marketing. So go through the development, production, refinery, and marketing. That is the best way to keep your costs down and to get higher margins.
So that's your prime advantage versus the other IOCs?
Absolutely, yes.
And the other major story is obviously the Aramco IPO. You're running an IOC. These guys and girls are going to come to the market. What does it take to get global investors to really want this stock?
That is a new story, clearly, but everybody knows Saudi Aramco. They know the dimension, the technology, the efficiency. So I think that is a very good story. It's an additional, I think, partners in the market. I think that they are progressing very well. They are really advanced in terms of not just technology, but also their footprint, because we are together in OGCI, so we know them very well. I think that is going to be a very successful story.
They're pushing the dividend story. I mean, some people are criticizing the dividend. It's lower than Shell, it's lower than a couple of others. But I get the sense they're pushing the dividend story. Has that got a consequence for you in terms of your dividend strategy?
No, I don't think so, because each company has its own story, and that is a new story. We went through a very consolidated story. The investors know and understand our dividend structure, our total shareholder return, so capital gain and dividend. So I think that is not putting pressure on anybody.
If I look at how much it costs them to take oil out of the ground, it's sub $3. Other IOCs are obviously higher than that. There's a logic here that sort of says, I need more Aramco exposure than I do to other IOCs. Do you think there's a threat in terms of shareholders shifting across the board with the Aramco IPO?
So clearly Aramco, as other company in this area, has a big advantage. First of all, a huge amount of reserves and costs, because all the activities in this for Aramco is onshore, so they have a very low cost, they can get very good margin, and that is a very positive side of this story for investors. And also is one of the reasons why we went here and we expanding our activity here, because the costs are lower, the operating costs, the development costs are lower, so is also a way to diversify for us and to stay in a region with very low costs.
You're not going to get out of the chair without a bit of a price of oil. We average $65. I know it's the game. $65 so far this year. If there's a trade deal, a substantial trade
64.
deal. 64. And Anthony got it wrong. $64 for the average for the year. Come on. If there's a decent trade deal, a trade deal of substance, where can that take the market to through Q1 2020?
Q1 2020, I think that we are going to have also in 20 and 21 a volatile situation. So I don't think that we can go through an increase of oil. So our estimation for 2020 is more or less the same, maybe a little bit lower than what we got this year. Also because the demand is not just a problem of supply, but the demand is really volatile.
So you think lower than $64 into 2020?
I think so, yeah. That is our estimation.